when the trade is too obvious, be wary. Hi, this is Charlie giving you Friday's video. I'm recording this at 10 to 4 on Friday, and I want to talk about the euro dollar here for a little bit. I know I've got a lot of trend lines on here. I need to probably delete some of these, but anyway, let's just clear up the chart a little bit from some of these trend lines. There we go. That'll do. Now, the thing with the euro dollar is that back in 2017 we had the French presidential elections and we had this gap here. I was trading through this. In fact, when we had the gap, this is a good actually, it's a good one actually, because I was long going into it. I had to lighten my load because I knew it was a big election, and the market was in big anticipation of the result of that. So I had to lighten my trade back there. But anyway, I was still in a position, but I had to take some positions off. Once that gapped up, I then added to my position because there were so many traders all over the place calling for the gap to get filled. So again, when something's too obvious, maybe it's not actually going to happen. And so it worked out for me on that occasion. Now let's take this to that gap. By the way, we've just been coming down into that gap, and the gap would get filled down somewhere in the low 107s. Okay, so take us to this week, and we got to about 107.80, roughly speaking. I think this week, roughly 107.80, maybe just a little bit below. And lots of people have started talking about the gap being filled. And so we had visitors in our trading room this week, and I took a long with the visitors. I took the long position on this is a 4-hour chart now, on Wednesday of this week. Yeah, Wednesday. And basically it's just gone sideways for 2 days, and then it's just come up and it's hit the targets. And again, lots of people are saying, oh, but what about that gap fill? The euro's going to go and fill the gap. And I'm of the attitude, the opinion, yes, it probably is going to. But it doesn't mean to say it has to keep on doing it at that moment. I had trading signals to telling me that I needed to be long. And so I took those signals. And when people start saying, and you're hearing, that people are talking about the gap all over the place, left, right, and centre, then that makes me think, maybe the sentiment's just got a little bit too skewed in one direction. When it seems so obvious that that's what it's going to do, it could well be that it's about time it's going to do something else. And we've just seen the euro have this really big up afternoon here. Just in the last couple of hours, it's shot up on the US disappointing PMI figures. So it's a case of be wary of the market sentiment. If you pick up on the market sentiment and it's all saying and it's generally all saying one thing, look for reasons why the market might want to do the other. Because if the move is too obvious, it's likely going to do something else. Now, my opinion is, yes, I think we will come down and fill that gap from back in 2017. This is what I was saying to our traders this week and to the visitors who were in our trading room this week. That probably will fill, but it may well be that the euro needs to bounce first because it's too obvious a trade. Okay, so I still think it probably will fill at some point, but maybe the euro has a little bit more to go. Maybe this is it. Maybe it's a one-day wonder and then it rolls back over next week. But either way, the point is that be wary of the market sentiment being skewed in one direction. It's a bit like, if I take us back to that weekly chart, I was being interviewed back down here at the beginning of 2017. And the interviewer, I was on a financial TV program, the interviewer was saying to me, talking all about the euro going to parity. Because the euro at that point was in the 104s, and so only got 400 pips to go to get to parity. And he was saying, well, it's obvious that the euro is going to go to parity now, Charlie. What's your view on that? And again, when you're being interviewed, and even the interviewers are saying all this, and everyone was talking about euro-dollar parity back then, again, and I've got reasons and technical patterns telling me that actually I should be buying, that gives me even greater don't get me wrong, it doesn't feel good at the time. It doesn't feel, in your stomach, you still feel like, oh God, I feel like I'm going against the prevailing trend, so to speak. But you keep reminding yourself, well, look at all that sentiment. It's so pessimistic out there that is the euro going to keep going down and just benefit all those traders all around the world who think the euro is going to go to parity? Probably not. And but when you're in the moment, it's not always the easy trade to take. So I'm not saying it's easy, but it's something that you should, if your stomach feels queasy at the thought of doing something like that, it's possibly the right thing. Okay, so that's the euro dollar. I'm going to share with you one other thing, and this is in relation to the S&P. So this is the S&P futures chart, and so S&P futures chart, we were shorting the S&P this week, and for some of our traders, I've been shorting it last week. So, but one little tip for you is go to. Well, it doesn't matter what the time frame the chart is. Ignore these purple lines. All these are for intraday trading. They just show the prior day's high and the prior day's low. So I'll just take those off. There we go. So one thing I think is important to note is when a market is making marginal new highs or marginal new lows. So if I put my new little thing on, look, from here to here to here to here to here, the S&P was just making marginal new highs. Okay, through that. Now that's a pattern. I say it's a common pattern. It doesn't happen all the time, but it's one that I look out for when a market's making marginal new lows or marginal new highs. That tells me that the market is starting to weaken. Even though it's making new highs, it's struggling to really push on through before the next little retrace is coming. So just a little tip for you there, as far as markets when they're making marginal new lows or marginal new highs, look for weakness to come in if it's making the marginal highs, or strength to come in if it's making marginal new lows, because usually it's a reversal type pattern. So there you go. There's a couple of tips for you this week going into the weekend, and I shall love you and leave you. Catch you next week. Take care for now.